Friday, May 3rd, market analysis, Stan Ehrlich. We have a sharply higher rally this morning, a little unexpected. You guys know I start out with the stock indexes, E-mini, NASDAQ, Russell, Dow, and go to the futures markets, bonds, energies, bonds would be interest rates, notes, grains, meats, some exotics, and a few others. So let's get rolling. This morning we ran up real quick, 5:30, some bullish news came up, California time, and made a new high for the last 2-3 weeks. Now that's significant because if we stay above the highs of the last 2 or 3 weeks on a closing basis, we have a minor bullish breakout, usually, plus the fact that it was up to and above a little resistance area. So I am frankly expecting it to slip right back down again toward the low of the day and or make even potentially new lows today. I'm well aware it's up about 60, 6 points on the spider, and a fairly substantial chunk on the E-mini, about 240 ticks. Looking at the E-mini 5-minute chart, right there at 5:30 California time on the 5-minute chart, it jumped like crazy, fiddled around, made a new high, and started to work its way down. So the first thing is to get below that 51.25 and then drop off even more, maybe, below the range from yesterday afternoon and all night. That would make it easy to make a new low for this session or for this date, the 3rd of May. And a complete failure of whatever bull news that came out to hold the market up. But so far, it's staying up, dribbling down a little bit at the moment. Okay, that's enough for the E-mini. The spider is, of course, going to be very similar, except remember, it only is open about 6.5 hours a day, and the E-mini is open 23 hours a day. Big, big difference. Therefore, the spider and the Qs and the DIA gap up and down. Because of the gap, it is likely within a short period of time to come back down to the high of yesterday on the spider chart, SPY. And if that's true, and it does it, we may be starting that downside move that I was expecting. Again, this knocked out a lot of buy stops. People that were either wanting to go long, a new long buy stop, or people that were short and wanted to get out when and if it made a higher high, which it just did. So if it drops down, a lot of the people will want to get back in again on the short side, or they got trapped in a new long and they're now losing and they want to push down the market and sell out of that new long that they just put on because of the new highs. Spider 5-minute chart. No surprise, looks just like the E-mini, or almost. You just don't see the run up at 5:30. So now you've got support below the market. You got to go back down to the low of the session of the SPY and then start making new lows for the session on the SPY that started at 6:30 California time. Okay, QQQ, same thing. It's an ETF, so it's got a big gap and new highs. Looking for a failure to stay up here. If we do stay up here, then I frankly would expect a little bit more strength next week. We'll see. The QQQ 5-minute chart, overbought in a resistance area on a pop-up this morning. So got to be careful about this situation. Up against a lot of resistance. NASDAQ Qs, so to speak. New high, resistance, floundering around a little bit up there with a 5-minute chart. You can see it just jumped and is now bouncing back and forth in that range and starting a minor little dip at the moment. We'll see where that carries. Now we've got the Russell 2000 futures contract, June. Pretty much the same situation, although the Russell's not holding quite as well at all. And it's already back down the middle of its trading session price range. The 5-minute chart will show you that. It jumped up, double topped out just a little bit right there, and then pulled back. And we're still close to the pullback low. And we're going to go with the YM new high, currently trading right around where the old highs were. And that was April 23 and 24. So I wanted to close at least below where it is right now. And as I mentioned a few moments ago, the lower the better, and even making new lows for the day would be what I am thinking is going to happen. And we got the Dow 5-minute, 5-minute YM futures chart came up to a little resistance this morning. I don't know. This looks very shaky. That's about what I can gather. Okay, let's go to bonds, interest rate futures and notes. New high for a short period of time, the last 2 or 3 weeks, and showing you that trading channel really has done pretty well. We dropped down to the bottom of the channel. I could drop this line down just a little bit to reflect the two lows being a little more accurately at the bottom. It really doesn't change anything. Yeah, that's about it. So we could even get up to the top of the channel, which I wasn't really expecting. I thought I was going to languish around here and then drop off maybe to a new low. I'm not bearish on bonds. I think it's bottoming out. I think we could have a test of the lows we've seen so far, and maybe even a minor new one this month. But at any point, and it could have happened already, I can't tell, we may have had the last important profound low. And when we break out of this channel, and downward slanting patterns typically break out to the upside eventually, that's the indication that a much longer term bull trend has started. 10-year notes, pretty much the same picture, getting a little closer to the top of its channel. The bottom of the channel is just a hair more well-defined, but good enough. Next, we've got this head and shoulder top in crude oil. I told you it was, I showed it to you before it started. Wednesday of this week, we had the downside breakout. Yesterday, we had a little bit of downside follow through. This morning, we've got another set of new lows and another new low and improbable new low close. And as I've been saying for at least a few days now, 74.25 is the minimum downside objective. These patterns, double top bottoms, rounding, head and shoulders, pennants, wedges, etc., that you can measure at a potential objective, those objectives are typically minimum objectives and can cause the market to go significantly further. So just because a market gets to an objective doesn't mean it's going to reverse. Next chart, natural gas. Price action looks appropriate. No problem with it here, as far as I can tell. And I'm liking the way this is acting. I'm going to reload real quick. It doesn't take but a few seconds here because I don't have the strategies running. And there we have it. It's reloaded. Looks perfect. Breakout. Downward slanting wedge. It's bullish. It's got to stay above the bear trend line across the top of the wedge. Looks like that's probably going to happen. And we're probably now going to start coming back up to at least 2.275, 78. But that's a bare minimum. I frankly think it would be easy enough to get up to another little bit more significant resistance level of 2. And I'll put a line here, and the reasons why are that low right there and that low right there. So that's a resistance level, and I don't like that line. I am sorry. Let's delete it real quick and go with what they call a ray, which goes further to the right, and it's yellow. Okay, that's really my first upside objective. Could get way up into this major resistance area in this big rectangle. Wouldn't be surprised. 2.7. Next chart. We have gold, silver, platinum. Gold this morning made a new low for the move down. We had extreme overbought conditions in the last month or two. I do think gold has more to the downside still next week. We're not oversold. We came fairly close. We do have a reasonably good bounce back at the moment. I'd like to see it close below 2292, 2291 and a half, I think, near the low of today so far, already a new low for the trend down. But it is coming back okay at the moment. Not great, but we'll see what happens. I'm still bearish. Next, silver. Same kind of comment, except silver did not make a lower low like yesterday. And it is apparently getting stuck in a support area. So a bounce back up to 27.34 would not be a surprise. And it got there already today fairly closely, not super close. And maybe even a little bit higher before it sees new lows again like gold. Platinum is a different story. Platinum has actually rallied strongly after testing a support area, getting oversold for one day in support. Great. Ended up with a good rally here this week, and now is testing the top of a resistance area and starting to show some weakness. Platinum may be topping out, but it's not overbought. I'd love to see it get overbought also, but I don't think that's going to happen considering the price action that we're looking at right now. Nevertheless, probably flattening out to have a downside correction next week. High-grade copper. We've got the top of the market with a bearish engulfing ER sell signal on the exact high day, April 30th. Don't have the strategy turned on at the moment, so you don't see my signals. This is a standard green and red, of course, candlestick chart. Nothing special about it in terms of my signals. We've got a doji inside trading range today, currently trading higher in the opening, no lower low, no higher high, just a little bit higher on the day, 141 ticks higher. Copper should work a little lower. Next, beans, corn, oil, meal, wheat. My trading system has caught 4 out of 5 of these instruments, symbols, to the exact low. We have a bottom bullish engulfing on April 19th, buy signal ER. Looks great so far. Yesterday, we had a new high close since the buy signal. The second low on a broad double bottom in a major long-term support area. That amounts to, wow, is this the beginning of something huge? I have to say that's possible. I need a close above 1240. And we're getting there pretty quick now at 1209. So that might, although I kind of doubt it, happen next week. Next week, if we keep on going up, we're going to get overbought pretty quick. We're already up to 69. Remember, not 70, but 75 is my overbought condition. And if it screams up another day or two, it's going to be at 75, probably. And very close to that previous high. That point, I probably would expect a minor downside correction for several days. And then we'll see if it can make new highs again above that 1240 mark. But that's a magic mark, 1240, 1241. So far, I'm liking, not great yet, what I'm seeing in soybean oil. Remember, soybean oil has the possibility of a gigantic bullish formation again, like soybeans. This is a head and shoulder bottom. The timing is right. The body parts are there. The neckline is there. There's a major trend line that also is about the same as the neckline. They're not exactly the same, but they serve the same kind of a purpose. So this is very, very, very early in the last shoulder low developing process. I don't want much sideways, and I've already got a couple days sideways. I don't want any lower lows. That could start to, and it probably will start to ruin the whole damn formation. What I want is a rally, ASAP. Next, soybean meal's done all of that. We have a major support area. We bounced off of it very nicely with a bullish engulfing on the exact low day and the meal at February 29th. Now, for the last few days, it's been running up in a new high ground since our bottom buy signal to the exact date. You could also call us a little double bottom. Not the perfect one, not exactly as good as, for example, this one back here in June of last year. That was nice, at the same support level. So new high, probable new high close at 370. This looks very promising, but now we're overbought. And we have been for a couple of days. So at any time, I could expect a minor downside correction. Nothing horrendous. Shouldn't last long. Probably will come down to about 347 or so and then move back up again. What about corn and wheat? Yep, we got a buy signal on the exact low in the corn market at a hugely important previous historical support level in September 10th of 2021. Wow. Okay, so now we've got late yesterday and following through today, new highs since that bottom that's green, bullish engulfing. I only have the strategy running, so it's not color coding it the way I like at the moment. I decided not to run my strategies today to show you the charts as most people would have them, basically a candlestick chart. But the resistance has now been overcome, and it's trading right now smack dab at that resistance level, 495, give or take a couple ticks. So I think it's going to rally back up and close on a price above 460. If that doesn't happen, then we probably have a little bit of a dip to 453. Not much, even maybe a hair lower than that, but probably back into new high ground next week. Next, wheat. And yep, we've got two back-to-back March 8th and March 11th, Friday and Monday, bullish engulfing ER buy signals. And the one on March 11th is the lowest low for a very long time period, ever since the beginning of the war. And that was a sell signal on the exact high day, March 8th of 22, it looks like. And all the way that bear market to the bottom when we have a double buy signal again, March 8th and 11th of 2024. We are about to make another new high. It looks like we already did it a few days ago, but we're now getting a little caught in resistance and we're a little overbought. So I'm not going to be surprised if we double top out here for the moment, dip down a little bit again, not too much, maybe 590, maybe even a little lower, 580, and then come back to make new highs and break through this resistance area above 645 and keep on going up. That would be adding fuel to a long-term bullish looking turn. Cattle, looking good. Don't have really a very strong opinion at the moment on cattle, kind of waiting for something to develop. Can't make up my mind. So I'm just going to let her go on the open range. Hogs, sell signal, the high day, exactly. April 10th, ER sell signal. Had built, now past tense, a head and shoulder top. It's a little lopsided timing wise. First shoulder over here, have the formation, and the right shoulder's there. All the body parts are there. They're just a little bit non-symmetrical. And down to the neckline, bounced one day, 2 day, and boom. Wednesday, we broke below, stayed below, closed below the neckline. Yesterday, dropped off even more. And today, guess what? We're dropping off even more. We're now approximately 1/3 the way down to my minimum downside objective, and that would be at 92.80-ish, give or take. I'm going to call it 92.80. Trying to pin it to the exact tick, but that doesn't work usually. But I come close often. So we're getting oversold yesterday and today. Any time now, it could rally back up to as much as, but no higher than about 103, and a fraction during the early part of next week. And then maybe by the end of the week, challenging the lowest lows. It doesn't have to do that. It usually has a rally to test the resistance to the neckline and then lower. especially when we're oversold at the moment. So I think we're about to have a little rally. And then we're going to go to ICE, and I will bring over the charts from another platform to show you what's going on the ICE exchange, the New York RBOB New York Harbor unleaded gas. This could also be, ladies and gentlemen, a head and shoulder top. It's my favorite technical pattern, one of the more complex ones, but I'm sorry, I've seen thousands of these over 53 years, and it looks like it. We are going down sharply today. The first time there's some decent evidence that the shoulder high was Wednesday and Thursday, yesterday and the day before. The timing is approximately correct. There's your first shoulder on the left, about, what was that, March 19th. The top of the market is always the top of the market for the head of the formation, April 12th or 12th, yeah, April 12th. And then again this week for the last shoulder. The neckline is slightly downward slanted, normal. Usually it's upward slanted, but there's plenty of examples where it's relatively flat or slightly downward slanted. Breakout level is going to be approximately 2.634 to 2.64. The minimum downside objective I'll measure for next week, because we're not going to happen today probably, but just eyeballing it real quickly. From the highest high to the neckline is about whatever, and I'm going to go down to about here. So I'm going to call it 2.4 for approximately the downside objective. Next chart is going to be the cotton. Oh, brand new today. Brand new. Oversold conditions, bullish engulfing. All it has to do is close higher than the previous close, which looks 90+% likely. Yesterday's close is near its low. Wow. Okay. Brand new trade recommendation via the automated trading system, ER signals, because it's a green bar. That was green. It was oversold. And maybe we're going to do about the same thing. This was crazy bullish long term. It didn't do much for about a month and a half, and then finally way up. This one, I hope, doesn't fiddle around for a month and a half. Hopefully it's going to just go straight back up. How far? Well, the first problem is going to be at 79.80. That doesn't look like it's going to be a problem. It's real close. Second problem might be resistance level around 83.16. Yeah, that looks a lot more profound. And if it gets up there quickly, it might even get overbought and then have a little dip. So those are my two first commentaries on cotton. Great. Next chart. Support line is so far holding, and that support line, and I'm going to rescale here for you. Okay. This is, I'm sorry, another head and shoulder top, big. You've got a double shoulder slanted upwards slightly back in the early part of last year, April, May, June. And this year we have the February, March, April Fool's Day, I guess, for the last part of it. Second shoulder, right-hand shoulder, and it slants downward slightly. Great symmetry. The top of the formation is a sideways trading range. You could peg the exact highest high for the top if you wish, but under these circumstances, you could also say the middle of the trading range time-wise could also be used as the center of the head as opposed to the highest high. It's not really going to make much difference. So I'm looking for a downside breakout of this neckline next week. I doubt it's going to happen today. And then we're going to start a move down that's pretty good, down to 1330. 13.30 would be my minimum downside objective on sugar. Pretty bearish. Next, coffee. Blow off top, overbought conditions, almost a bearish engulfing on the high day. Not quite. Too bad. If it had been lower than the previous day's low on April 18th, it would have turned red, bearish sell signal on the exact high day. But it didn't. All I had was extreme overbought conditions up to 96 or 7, maybe even better than that. I don't know what that was. 97 looks like. Horrendously higher. You don't get to 97, 96, but maybe once every year or two per symbol. Rare, very rare. Almost, and I hate to use this word, if I had government licenses, it would be illegal for me to use the word guarantee, and I'm not guaranteeing a damn thing. But that's almost. Okay, now we're oversold, and we're coming back to support. Previous highs made back in December. So, perfect place for it to start bouncing, huh? Next, OJ. I'll be damned if this thing isn't staying in this pennant formation. Wow, that's one heck of a pennant. I haven't seen a pennant stick around this long for a long time. We're really getting squeezed off here. You only got a couple more weeks until we have to do something about this pennant, either start to go above or below the support lines or resistance lines. And cocoa, almost a bullish engulfing today. If we make slight new highs above yesterday's highs before the close, then we're going to have a green bullish engulfing ER buy signal in oversold condition. And this also had been a blow off type top on cocoa. I'm sure I mentioned that at the time, and probably a week or two too early. But this is what happens. They're real tricky to catch the exact day unless I get a signal, and sometimes I do. And then I got to scream bloody murder on the exact day. I hope the exact day. And we're back to RBOB. You guys have a great weekend. Profitable trading to you.